Chart of the Week with Redmayne Bentley.
You're listening to financialradio.co.uk. My name's Giles McMullen. Here's Bill Rook from Redmayne Bentley. Bill, we've got some charts to look at this week. It's been a volatile week on the market, and you're focusing in on three charts here. We're going to start with the S&P 500 because you think this is telling us something.
Yeah, I do. I thought we're bottoming. What I'm looking for here is, or looking at here is with the MACD weekly, which I put in, it's kind of known as a second indicator on the chart there, with a blue background and a white line coming down from the left to right on that. So from the high points, we had a sell signal on this one from the top on about the 5th of November. We had the sell signal. Now, obviously, not quite at the high, but what triggered that to come down lower was the top over at the bottom, using a short-term directional movement. So the technical was there when the underlying index hit a new high, and the multi-frame MACD was actually not. It was actually not showing it was a new high, and that was indicated by the white line that's they're coming down, and the blue line on the chart going up. So you have a divergence. Yeah. So this is contrary. What we want to see is following the direction of the chart. When this doesn't happen, this suggests there's something going wrong or something about to change, and that would have triggered alarm bells perhaps for some of those who are watching that, and you probably would have moved into a put or a short position from the 5th of November. Now that would have yielded about 16%. Now had you waited further confirmation, now what would you wait for? You'd wait for the second blue line to come down, the second blue line on the from the left comes through, and that was good when the MACD weekly turned negative, and that would still yield, that went through about 14.11. It would have been about 15% return, which isn't bad to date. The problem here is how do we exit? Once you're in a short position, how do you get out? Because the market does fall and rallies quite sharply, doesn't it, in April, May?
Certainly has.
And when do you get out? Now, what the market's saying at the moment is that we hit a new low recently, and have we got a reversal point coming through? I think MACD is not hitting new lows anymore, so we've got another white line this time rising, and against the contrary blue line on the chart, which is falling. So what you have here is a situation of divergence. You have the indicator suggesting that it might be turning, and the underlying chart suggesting, well, it does look rather weak, doesn't it? That's confirmed by the 1-year crossing the 2-year moving average, the green over the red. So over the perspective of the market, it doesn't look good, but we have a situation where we have a rally in prospect. Now, what I'm waiting for at the moment is looking at a bottom indicator, directional movement, which will give you a short-term indicator as to whether the market direction is turning up or not. It's recovering, but not strong enough. So I'm waiting for the green to cross red to go long on the S&P. So it's a step up, we're ready to go long, but not quite there yet.
Now, the S&P 500 is dominated, or there's a substantial amount of financials in the S&P 500.
Absolutely.
So that would explain why we've seen what's been going on in the S&P 500. You've got an iShare that you want to look at following US financials.
Yeah, there's three funds I've come across set up in the States that are interested in it. The iShares Dow Jones US Financial Sector, the Vanguard Financial ETF, and the Financial Select Sector. IYF, VFH, and XLF. Now, all of them have the same sort of chart pattern. I've taken one of those. I've just taken the IYF, which is the iShares Financial, which you can from the same sort of format. What I've done here is use the 50 and the 200-day moving average on here, and I think it's really, if one is to look at charting at all, these are really the top moving averages to use. You'll see the quick snapshot of what the trend's like, and you can see here, when the trend goes wrong here, the 50 crossing the 200, right on the 26th of July 2007 at 107 on that using that indicator.
Yeah.
And it coincides with the multi-frame MACD, that's the weekly MACD, crossing into negative territory. So we've got a confirmation that's happening. Already the directional movement is negative, so that's a shorter term indicator that's going negative, and it also confirms with the weekly inverse transformer of Fisher, which is a normalized transformer of the RSI, which is sort of a normalized version of the RSI, which is gains on a weekly basis, indicating again that we're going short. So we've got three indicators suggesting that this isn't very good. I've got a daily MACD on here to show that is already in negative territory. So this is a bad news state for the market. So last year, this is when the financials were going wrong. Now, what can happen is that these indicators work very well here, but you can have a situation where the market is travelling sideways, and you have these in and out situations, and you don't actually get full confirmation because you think, well, it's not going to happen, is it? Isn't it? Because market might be sideways a bit, and then it might rally a bit, and all those things. And you wait for further confirmation, perhaps, for the downside. And that is that's one of the problems using this indicator. It's all very well on the setup saying here very well, but in a sideways market, you can be chopped in and chopped out several times, and that's just the price of you pay, I suppose, for following this sort of setup. But the indicators, two indicators here, look very bad for that sector there, and as it stands at the moment, we've got a lot of volume coming in, multi-frame volume coming through. This is the volume on a weekly basis transposed on the daily chart setup. We have a lot of volume coming in from the lows. We might get the mean revert to the mean here, where the underlying might come back to the 200 moving average, which is in red here. That might happen in time. People are betting on it happening in shorter term. We had a bit of a rally, but I don't know if that's sustainable.
Okay, Bill. Now, the next one you want to have a look at is the CRB index. This tracks commodities. Why are you looking at this, and what's it saying?
Is it over? Is the commodity boom over? Now, as I said earlier, a little bit earlier, when you have indicator market going sideways, and you can see on the oval on the left-hand side what happens when the market goes sideways. What happens to the indicators? They get tossed around a bit, and you can actually be in and out and shake it all about, and actually lose your appetite for trading. Hence, as you said earlier, I'd rather give up 5 or 10% on the market move in order to get it right, and that's probably a very priceless words to say. And I think if a lot of people did that, they wouldn't be in and out shaking about losing money, losing appetite to trade, and actually missing opportunities when they do turn up. Yeah. So there are other ways of doing that, but I think look at where the vertical line comes in on here, which is quite a critical point on the CRB index, which is on the 28th of September 2007 at 336. That's actually striking new highs. A lot of people say, well, why bother to wait for new highs? Well, it is actually marking the start of a new trend here. It's confirmed by the IFC of the RSI, which is very good. And the multi-frame MACD is already positive and going up, and the daily MACD is going up, and the expect reduction movement is already positive. So that's already kicking in, it's going well. And the 50 is above the 200, the green is the 50, and the red is the 200. So the trend is starting to work here. Now, when you get out, now, there's a possibility on the 22nd of July, we had those large falls in oil, after we had those large falls in oil prices, has it all come to an end? Because this is one of the things that I keep getting asked is, are commodities is it the end of commodities yet? Well, it depends on your time frame, really. Because the market, the 200 days is still chugging along nicely on the upside. The 50 days is coming down a bit, and the MACD weekly is still well and truly positive. The IFT of the RSI hasn't even, well, it hasn't gone through positive 0.5, let alone minus 0.5. So still in an uptrend, short term down. So suggest that the commodity still there's life in commodities yet. If there's life in commodities, it's going to be a bumpy for equities.
Bill, thank you very much for that analysis on those charts there. We looked at the S&P 500, the CRB index, and an iShares index of the financial sector in the US. As always, Bill, very interesting and illuminating to chat to you. We will chat to you next week. Bill Rook from Redmayne Bentley, thank you very much for joining us.
Thanks, Charles.
Chart of the Week with Redmayne Bentley.